In this video, I'm going to talk about the Section 1245 property gains and losses. First of all, what is Section 1241 properties? So here is saying Section 1245 property is a depreciable tangible personal property used in trade or business under the Section 1231. So Section 1245 property is a type of Section 1231 property. So example like the trucks, computers, office furnitures, those are considered Section 1245 property. So when you sell Section 1245 property, you must recapture your gain as an ordinary income to the extent your earlier depreciation deduction on the assets that was sold. So here basically tell you, say, well, if you have any depreciation recapture on the 1245 property, that's recapture is the ordinary income to you, so gonna be taxed at the ordinary income tax rate. So anything, the amount of the gains that exceeds the depreciation previously taken is then treated as a Section 1231 gain, which is long-term capital gain. You can use a long-term capital gain rate is 0%, 15%, or 20%. So we're gonna do an example later, so just be aware of that. The Section 1245 recapture rules do not apply if the assets sold at a loss. In this situation, they just say, well, if you sell assets at a loss, even if some of your gain is treated as a long-term capital gain, however, your loss gonna be not going to be treated as a long-term capital loss. So what they treated is say, if a Section 1245 assets is sold at a loss, the loss is treated as a Section 1231 loss and is deducted as an ordinary loss, which can be reduced the ordinary incomes. So here tell you, say, if you have a long-term capital loss, is not going to be treated as to offset the long-term capital gain. You are going to be treated as the ordinary income loss, right? So that's basically that's what I said. Let's see an example. Here's the example. Say a few years ago, Mike bought some depreciable antique office furniture for $75,000 to be used in his business. Before selling the furniture for $85,000, he wrote off $45,000 in depreciation. So you can see here, so originally bought cost was $75,000. So you wrote off depreciation. This depreciation will reduce your adjusted basis. So your adjusted basis is equal to $30,000. $30,000 then is $75,000 minus the $45,000. So this is your new adjusted basis. However, in this first situation, say when you sell at a gain, right? When you sell at a gain, you can use adjusted basis to calculate everything. But for a quick way to get the answer, here, because you bought your furniture at $75,000, then you sold at $85,000. So you get a gain is $10,000. So this gain will be treated as a 1231 gain. this will be treated as a long-term capital gain. Use the long-term capital gain rate. Then what is Section 1245 gain then? So it's the entire, whenever you sell a depreciable property, if you sell at a gain, your entire depreciation will be recaptured, right? So then your Section 1245 gain, in this case, is the entire 45,000 depreciation. So it's taxed at the ordinary income tax rate. So if you don't use this one, you can quickly use it. Most of the time, most materials that tell you how to use the adjusted basis. So basically say, well, if you sell at 85,000, your adjusted basis is 30,000. So then you have a gain is 55,000, right? You have a 55,000 gain. Then within this 55,000 gain, you have a $10,000 is 1231 gain. Then the 45,000 is 1245 gain. So you can do that way as well. However, this is just a quick way for you to get the answer. Now we say, okay, so in the example, they say is sell at $85,000, which is you sell at a gain, right? So what if the furniture is sold at $60,000? So at $60,000, you can see you bought at $75,000, then you sold at $60,000. So you actually have a loss, right? However, because you have an adjusted basis is lower, so then you do have a gain. So here we're gonna use adjusted basis because it's easier to do that. So basically say, well, if you sell at $60,000, basically say if you ignore all the depreciation, you actually don't have any gains. So obviously, we don't recognize any loss because you do not have a loss because you have a lower adjusted basis, for tax purpose. So here, the Section 1245 gain is your adjusted basis is $30,000. You sell at $60,000. So your Section 45 gain will be is $30,000. This basically is a portion of your depreciation recapture. So this one will be taxed at an ordinary income tax rate. So because this is depreciation recapture. Okay, the third situation. Say, well, what if the furniture is sold at $25,000? You can see the $25,000 now is lower than the adjusted basis. So in this situation, you can recognize again. Only when you sell less than the adjusted basis, you can recognize a loss, right? You can recognize the loss. Here, the loss is a Section 1231 loss. Well, it's a Section 1245 loss as well. So the loss is $5,000. This will be treated as a 1231 ordinary income loss. So this will be used to, for any your ordinary income deductions to offset any ordinary income gains. So anyway, so that's the example of the Section 1245 property.